All right, welcome to Volstarts, where we talk everything markets and those who make them. Today's episode is brought to you by Mars Corporation. Every holiday season, you trust us to provide the highest quality candy. Did you know we also provide the highest quality dog food? Let every day be Halloween Day for your beloved pets. And before you connect those dots, let's just call it Synergy. Still don't get it? We may only market food for cats and dogs, but we are feeding pigs too. Still don't get it? You're the pig, and nougat is sweetened expired cow meat paste. And finally, by GammaStrike.com, providing actual real-time data for every type of trader. You've tried the rest, now try the best, GammaStrike.com. I'm Jay Fresh, and I'm joined by my hosts, Gherkin and Dork. All right, let's get in the market overview. And if you guys haven't guessed, my goal is to make this podcast, this entire podcast, an hour-long intro by year one.
I thought that's what you were aiming for.
Yeah.
And now I'm just thinking that you're short selling.
I might be. Nah, I wouldn't do that. I wouldn't manipulate our listeners.
You mean
that.
like all the other financial media?
Listen.
Do you know the only reason we have news about markets is because of market manipulation?
Yes.
It's the egg. We're just a chicken.
Who's the cloaca?
Does Mars make food for us?
I think we get turned into Mars food.
Yeah.
All right. Government shutdown. Officially longest shutdown ever. We did it.
I called it.
Woo.
By the way.
Yeah.
Wait, no, boo.
I knew it was going to, I was pretty confident it was going to last a while. I don't know that I expected it to last this long. I'm pretty surprised at how little damage it's done. Well, that I should say that with an asterisk, little perceived damage so far, at least from.
I don't know about that. I feel like, okay, let's be a little empathetic and say that it's done very little damage to any of us.
Yes.
Yeah.
I meant it from the perspective of the market. The market has not really cared.
I think it's starting to.
Maybe.
It's because, I mean, how many government employees make up the majority of spending in the U.S.?
It's significant. It's not nothing.
How many government employees were there left after
the top 10% of income earners make up a majority of the spending in this economy. Yeah. So any effects from the government shutdown will be slightly less pronounced because people are already kind of tapped out. So it's really not going to look too different unless it gets pretty damn bad.
Well, yeah. I mean, you're not wrong. With the removal of SNAP benefits, though, you know, that's a benefit of like $187 per person per month for 42.8 million Americans that receive SNAP benefits. The majority of whom, and most people don't know this, work full time. Those people represent a significant portion of the amount of capital flow into consumer non-durables. So a big portion of the money that Target and Walmart and Kroger and even more local like Albertsons and stuff like that receive every month. It comes from SNAP beneficiaries, and those people will not be spending that money this month. In many states, they will simply not be receiving any benefit. Some states have stepped in to try to pad the benefits in the absence of federal funding.
I
believe
in my state they did.
So I thought they were able to get partial payments for SNAP from the government.
So two judges ordered. So SNAP is supposed to be protected from a government shutdown. It's got alternative routes of funding. However, the administration so far has refused to fund it in any way until the government is, quote unquote, reopened. So they are using the hunger of 42 million citizens as leverage, political leverage, which is just a war crime, so not a big deal against the other party. When
you put it like that, it sounds awful.
Well, it is, in fact, using us mass starvation as a political tool is is in fact a war crime. It's codified in the Geneva Convention.
What about like secret police and deploying your own army against your own citizens? Are those?
Yep.
So we've
That
got
is too.
like a pile of war crimes that we're collecting.
Well, that's not really I mean, it depends. I think that in an international tribunal, I don't know if having your soldiers in your streets is going to be a war crime, considering some of those guys probably do it. But it would be unconstitutional for sure because we have kind of a whole thing about that.
Yeah, that's not what this show's about. All right, so
nope.
No, without getting too political, I really want to focus on the spending. That's a big impact.
Yeah, well, Oh yeah, sure. Go ahead.
Oh, so we're also now, 36 days without major data. We're missing another round of labor data. And we got ISM reports today and ADP reports today that were very confusing.
They were like, it's okay.
Yeah, ADP showed quite a substantial amount of growth from the prior month, showing a bounce back in the job market, meaning Fed is far less likely to cut. And then services grew at a pretty quick pace, as did services pricing, which was the highest level since November of 2022.
Well, that's in direct contradiction with what the Indeed job openings have really kind of been suggesting.
Yeah.
The ADP report, which was that was the interesting thing to me. I was like, huh. So that's a big, divergence. I'm wondering how that's going to shake out for sure.
Yeah, I mean, some of that too, though, is like with the Indeed job thing, like there was a glut from COVID. So I think there is something to that narrative of saying that some of those jobs have come down because they never should have been that high in the first place. But that also being said, I mean, the thing that I like to look at, which I feel like is the statistic that lies the least in terms of the labor market, is the employment level. So how many people, not how many people are unemployed, because you can play all sorts of games of who counts and who doesn't, but just how many people in your country per capita, how many people, what percentage of your people are employed? And that number has been stagnant since, 2022 and has been declining since then, mildly. Never a good sign, right? I mean, you could argue away, maybe it's a shift of age from young to old, right? So you just have more retirees, so you have fewer workers. Doesn't matter the reason, though. The fact that that number is going down is not great for a system that relies on ever increasing growth that never stops. Um, so at least in terms of that number, I think regardless of all the other noise from Deed or ADP or Challenger, all these places, you just look at that number because that has the fewest amount of assumptions in it. The only thing you're assuming is how many people work and how many people live here, and it doesn't look great. It hasn't looked great for a long time. But I wanted to pivot a little bit about the government shutdown and spending. So a big part of the shutdown is that the money's not flowing quite in the circle quite as well as it normally should, right? And so I think what's ending up happening is banks are not getting their expected payments from the government, right? Or that money isn't flowing into them, but it's flowing out of them, and it's creating some stress in terms of liquidity for banks. And so we've seen some interesting things happening in the interest rate division. Girk, do you want to go through SOFR, IOR, those things? First of all, what are they?
So yeah, we can start off with SOFR is the secured overnight financing rate, and IORB is the interest rate on reserves. And basically this is I guess the easiest way to explain it is that the wider the spread between the two of them tells you a lot about how much overnight funding costs or like short-term cash And usually IORB, the interest on reserve balances, is higher than the like on RRP levels. And so most money markets trade between on RRP and IORB, like somewhere in the spread between those two. And then SOFR's, the actual overnight repo prints in the treasury market. And so if you have really normal ample bank reserves, on RRP will be greater than or equal to SOFR, and SOFR will be greater than or equal to IORB, right? But just maybe like a few points of spread between the three of them. And that means funding is really easy, repo is competitive, the plumbing isn't getting bound up. If IORB is lower than SOFR, or SOFR greater than IORB, that means that there's funding is tight or balance sheets aren't where they need to be. And we've talked a bunch over the last few weeks about how there was some stress from these non-bank financial institutions, and how because they're not prime dealers, they don't really have good access to liquidity like a GSIB would. And we kind of talked about how this could be, I think it was a few weeks ago, this could be kind of a contagion, especially as bank reserve balances started to dwindle with the ending of quantitative tightening, but no move to quantitative easing. So without the Fed being able to step in and buy the short end, what you end up with is you end up with a lot of people who need cash now.
Call
I had to.
JG Wentworth. 877 cash now. Are they still around?
And we have no affiliation with JG Wentworth.
You end up without a buyer for that cash, for that short-term cash. Simply because those rates aren't, even the spread on those rates is not beneficial to anyone. And so what you get is the rates at the short end push up, which makes people, the value of those bonds decline. So now you're losing money to convert your short-term paper into cash, and it's harder to move it. And the more and more you run into that, the more and more short-term funding constraints you start to run into. And since non-bank entities can't earn IORB, they basically keep bidding up the repo. And while banks can arbitrage that, if there's an issue with their supplemental liquidity requirements, they're not going to, because they would put themselves at risk. And so what happens is you get kind of a wedge between the SOFR rate and the IORB, and that wedge is going to create a lot of short-term funding issues on that dry liquidity. And over the last few days, we saw that spread move from very wide, in excess of 30 points, to I believe 10 points into tonight's session. But it took almost 3 days from the end of the month, where that liquidity is most important, right? Everyone's trying to mark up their balance sheets and make things look good. It's commonly known as like window dressing, and it happens at the end of every month and every quarter. And this was just a monthly one. This isn't, it was end of October. It's not a quarterly window dressing. There's far fewer participants involved. It's a lot of like systematic funds and private credit and like some pension funds offsetting their gains for the month. And so even with such a small demand, we got this really, really wide and very, we're 72 hours into it, very long period of fairly significant spread and illiquidity between these two interest rates. That's really going to meaningfully impact how these institutions are able to get their short-term funding. And so I wrote about this over on my Twitter a couple days ago, kind of right before the market tanked, and no one really knew why the market was tanking. And that's because this really matters, because effectively that spread is tightening. It's tightening, like monetary tightening, and funding costs, if they're running hotter than the policy rate, which we're now seeing on like the 3-month and 6-month, where the effective federal funds rate is at 3.75, but the 3 and 6-month treasuries are trading, the 3-month actually hit like 4% the other day in the overnight session, and still I believe running kind of hot right now at at 3.897. So only only like 13 points off of 4% at this point, and up substantially in the overnight again when that need for liquidity is present. And so
can I just
all
stop
of that.
Can I just stop
Yep.
here and say, I've been saying for a long time, one thing I can't wait to see is when J-Pow cuts too much and the rates on the short end start lifting up and he basically just gets pantsed on live television. It's starting to happen.
Well, that's happening. And these, the hotter that rate is running, it's going to nudge up OIS, it's going to nudge up the discount rates, and it's going to start to squeeze levered trades. And this is something we've talked about for an even longer period of time, right? All of this leverage in the market that's driving these all-time highs, that's driving them, above where you would think that we would have just simply physically run out of cash to buy more equities. All of that leverage is funded by these like basis trades and these same as cash holding positions that are used with their broker, their clearing, as their margin. And this means that things like futures basis, are like bill carry, CDS bond basis, index cash futures, dividend arb, dispersion, VRP carry, CLO tranche, RV and ABS basis trades, all of these levered instruments, all of these like trades that everyone thinks are safe. Well, they're all safe up until the point that this happens. And basically dealers don't want to participate in those markets. And so the primes pull back out of the treasury market, and market makers pull back out of the equity markets. Your market depth gets really thin without so many dealers present, or dealers at least unwilling to make those further out of the money spreads tighten up. And then that illiquidity starts to increase volatility, and then all the tails on all the distributions start to get really, really fat.
Okay, so my question then is this simply a linear progression that's been happening over years as, people lever up on dwindling reserves, as, QT has been in effect for a long time, and this is just that linear effect of QT slowly catching up, or is this a pain point because of the government shutdown? So I guess my question is, if the government was to reopen in the next few days, would it alleviate most of these issues, or are these issues more chronic?
These are chronic issues. I don't think the government shutdown's really affecting anything here. Obviously, the Treasury is completely unaffected by the government shutdown. And I think this is really a symptom of cutting rates and the yield curve control policies that persisted from the end of 2023. when Yellen started selling the short end as hard as she could.
Praise be.
All the way through Basant, who continued that trend.
Yeah, didn't they all dunk on Yellen, and then they just became Yellen 2.0?
They literally just adopted her policy right from the first QRA and kept it going. And when everybody in the market is just like, 90% of their same as cash holdings are on the front end of the curve, if people need cash, that's where they're going to need to go.
So when does Mama Yellen?
And then if people need safety, because the front end of the curve looks scary, that's going to start to push down the back end, which is and then you start to get some really really nasty steepening, right, where you get the front end up and the back end down, because everyone's trying to roll over their short paper into longer dated treasuries where the yields are better, there's more stability, and they'll be granted more margin on their cash holdings.
So when does Mama Yellen get sainthood? That's got to be coming soon, right?
For keeping the show going.
Yeah. All right. Hard pivot just to keep it moving, because there's actually surprisingly a lot to talk about, even though a lot of our data is not coming through. Lots going on with Supreme Court and tariffs. So the Supreme Court's finally the tariffs are kind of getting percolating up to the top here. We're getting some news. What's the news? What's
we
going on
listened
there?
to it for a few hours on stream today. Basically, a lot of businesses are suing the Trump administration for enacting tariffs that are in excess of the presidential limits, which are about 10 to 15%, I think. And that's dictated by IEEPA or IEPA, which is a law that.
What did you just call me?
It's it's a bill called IEPA, and it dictates the powers of Congress and the powers of the president in regards to tariffs, and basically codifies how tariffs are to be used and by whom and at what rate for how long. And the president has some powers to keep some tariffs going for a little while, but eventually, because the power of the purse belongs to Congress, Congress has to, set and approve those tariffs for them to continue, or they need to cease. And now, in the event of an emergency or a wartime scenario, presidents are allowed a little extra freedom. And this administration has made up several emergencies to justify the use of those powers without the permission of Congress.
Sir, we're in an AI arms race.
With ourselves, yeah. The only thing is there's just not enough arms to jerk off all the AI companies.
We can't say jerk off on this show. The show is for
we can. I just
5 and under.
Oh man, there goes.
Okay, listen, just because the average listener has a room temperature IQ doesn't mean they can't understand what we're talking about. That they're 5 years old.
I also should say RFK Jr. has recommended that you do not mix your IEPA with peyote or Tylenol. Or Tylenol.
It's too late for the Tylenol for me. My mom took so much of that.
Yeah, I'm a Tylenol baby for sure.
Yeah, so where's it going? Where's this tariff stuff going? Like, when is it? I mean, let's say the Supreme Court's like, yeah, you did too much. You gotta unwind it. What do they do? What do they do with all the money?
Nothing. I mean, this is I think the big problem that we've run into with this administration is that we're not
too
really
stupid
sure
to undo it.
So far, the administration hasn't openly defied the Supreme Court, but they've defied every other level of federal court. And then the Supreme Court has ended up largely supporting this administration's, plans and consolidating more power in the executive branch. However, if things were to go as they should, and the Supreme Court ruled that the tariffs were unconstitutional, and the president had taken powers from Congress that he's not allowed, and act in their role, the separation of powers. Well, the first thing that would happen is that the Treasury would need to pay back all that money.
How? Is there even a mechanism to do that?
Yeah, they would have to issue, the same way the Treasury pays all the other bills, they issue debt and they pay it back. And that's how that would actually have to unwind. These businesses would then be, reconstituted for all tariffs paid up until this point that were in excess of the legal limits. And that's what these businesses are suing for. I mean, they want their money back. So, yeah, and obviously, we already have a bit of a funding problem that we just discussed. So I'm pretty sure the Treasury digging up an extra $200 billion won't be a big problem.
Nah, right? it'll be easy.
Just throw it on the short end, bro. It's all good. It can handle it.
Yeah, sure.
We'll just throw more on there.
So many
issue more fucking 3-month bills.
Until we get a 3-month auction that's like 4.3%, the dollar breaks and all the money markets go under.
Another terrible hard pivot. But speaking of impending disasters, so apparently Mamdani won in New York City. It's the mayor of New York City. Dork, how has your life changed since that momentous occasion over there in Reno?
Well, first thing I noticed was that people got half their SNAP benefits from the state of Nevada, and some of them only got $12. Some of them got like $120. But other than that, it was windy today, so there was some wind.
And you think
clouds.
And you think Mamdani was the source of that wind?
Probably, yeah. Absolutely.
I just want to know the number of Americans across this country that showed up to their polls yesterday, prepared to vote Mamdani out of office, only to realize that they didn't live in fucking New York.
Yeah, well, I asked the guy from Reno because obviously it's not a big deal. It's a city, right? It's a shitty job in a city.
It's a mayoral election. I live there. I live in New York City.
You live in the city.
I do.
How has your life changed?
It hasn't at all. And I'm not sure it will. I guess, I'll just do what other rich people do when they don't want to pay taxes.
Are you prepared to flee?
Live here.
You're prepared to flee?
No, I'm not going to flee. I'll simply, I'll buy like a shack in West Texas, and I will live there 6 months of the year.
You're not allowed. Our governor's going to charge you 100% tax.
Too late. Already bought it. You can't do it.
Nice. Shit.
How's he going to prove where I'm coming from? He doesn't know. Find me, bitch.
Get a Wyoming LLC and get in there.
And it's Texas, so I dare him to come on my property, right?
Oh shit. Yeah, we don't do that in Texas. We value private property rights because that's a dumb reason to die.
Being on someone else's lawn.
Yeah, so okay. We had some huff and puff. Everybody was looking at. A lot of bets were made on whatever the betting websites are, Kalshi and.
Oh God, yeah.
We even
honestly
had,
like
what's his face, our Twitter warrior. Who? Oh God, what's his name? White hair, really dumb.
That describes so many of them.
Bill Ackman.
Yeah, Bill Ackman. Yeah.
He even said, he had to do a mea culpa and say, oh, congratulations. And he threw in a, let me know if there's anything I can do to help you. Like he could do fucking anything.
Yeah. Trump also said today that he's going to help Mamdani as well.
Interesting. Yeah. Okay. So anything to look out for there, or is that going to go? Nobody's going to talk about it in 2 weeks.
Kind of just waiting for New York City to get invaded now.
Yeah.
That seems like the next logical step. That was actually Andrew Cuomo's only campaign promise. Besides saying, "I swear to God, I'll never touch those women again." He also said that if you vote for me, Trump won't invade New York, which was valid.
Yeah. I don't really know what to say. I guess I just don't give a shit.
Yeah, I mean, I live here and I don't give a shit.
But a lot of people did. It was all the rage to talk about. I think in 2 weeks, everyone's going to move on to the next thing.
Yeah.
The next thing being something we'll talk about, I think, later on. But let's do another hard pivot. We're just going to hard pivot all the way through this. We got to slog through
love it. I'm sick, so.
Trump Z Summit. What were the takeaways? I've been trying to read up on this. I have no idea what the fuck is even going on there.
So, right away, the White House released a list of agreements that had occurred between Trump and Xi.
Yeah, but China released a different list.
And yep, within an hour, China had released a completely different list. China had outlined several conditions in which this trade agreement would be violated. I think that the effective outcome of both of their lists would have been that everything just goes back to where it was in March, had nobody ever got the bright idea to fucking tariff our largest trade partner and manufacturing base. And so it literally just a mean reversion to where we were, 8 months ago, which is not a win. It's not, I mean, it's definitely the art of the deal, but I'm not really sure that anything was gained or lost by any of the participants. If everything were within those parameters, I'm also not sure that anybody's sure there's actually a deal. I don't think I've seen tariffs get repealed on China yet. I haven't seen any.
Yeah, it's like, what's the current
I haven't
rate?
seen
Like,
anything,
who the fuck
right?
knows? Yeah.
Yeah. And I don't think people have a lot of confidence that anything positive or negative came out of that meeting. But I will say that both parties have an immense amount of incentive to lie and save face. So
we don't tell lies here. We tell fibs. We don't accuse people of lying. We accuse people of feeding humans dog meat in jest. It's all in jest.
Okay, let me I'm so sorry. Let me rephrase that. I think one party involved in these trade discussions may have spent the last 8 months talking about how great of an idea they had and how great it was working and how much it was making their country better again, only to effectively admit that their win was just a reversion to exactly where we were when they started.
And just to be clear, we're not even sure that has happened.
Yeah. And we're not. And so, I'm so sorry if anyone was offended that I accused them of falsehood.
Thank you. Yeah.
Yeah.
All right. I don't know what else to say there, except I'm probably as confused as everybody else. And if you aren't quite sure what's going on, I think that is most people. And if anybody's saying that they do know what's going on, they're probably stating a falsehood. Ooh, I almost got caught there saying the L word.
I would say that they're probably almost as full of shit as everyone else involved, but.
All right. One more hard pivot, and then we're going to move on. Air traffic.
Right, I'm ready.
The shutdown's gone on forever. We've talked about some of the cracks that are showing. One of them is air traffic control.
Yeah. I don't know if air traffic control is as important as losing food, but
for the markets, absolutely not.
Yeah, I would say that it's well, it is. I mean, if there's 40 airports and they're slashing air traffic down to 10%, that's a lot of business travel. That's a lot that's going to be affected heavily. It's definitely going to slow down the pace of economic growth. And the more they broaden that into more airports, the worse that's going to become. So it's another screw that the administration is trying to turn in an effort to in an effort to win this shutdown battle. But I'm not sure. I'm not sure it's really effective. It's like, oh well, we're gonna take away your food to keep you from getting healthcare, and now we're gonna take away your travel to keep you from getting healthcare.
So I
And
want
it's
to I want to juxtapose this air traffic controller news with the other recent news that there was a UPS plane that crashed in Louisville or just outside of Louisville recently because there's a huge hub in Louisville. Um
I saw
and
that.
I kind of think, thinking like with all the Boeing mishaps and the mishaps at Reagan
Mhm.
Airport in DC. It's kind of becoming, I'm thinking back like 20 years ago, and I feel like if I was reading the news today about airplane crashes in the United States, I feel like I'm reading the news about like a country in Africa.
Yeah.
Are we just sensationalizing airplane crashes? This seems
No,
I
I
will
think we're
say
getting a
I
significantly higher
still
rate of
I
them.
still get on a fair number of airplanes every year, and I will say I do have a sense of dread in the back of my mind that didn't ever really sit there before.
I think it's a valid sense. I mean, well, so Doge came in at the beginning of the year and they accidentally fired a huge swath of air traffic controllers, many of which were very close to retirement and did not come back. And I don't think most people know this, but to become an air traffic controller is a very specialized training process that's only open to certain individuals of a select age and mental and visual acuity. And so it's a slim list of people who can even go in to train to get this job. And then the ones that make it through that training and start working at smaller regional airports and practicing in real life, is an even smaller number of that tiny pool of applicants. And it's an extremely specialized position. And not only did we lose a large number of them back at the start of the administration with the Doge cuts, but now we're losing more. And we're losing more because they're not getting paid. And these are not military employees. They have no commitment to the job. And if you live paycheck to paycheck and you miss two paychecks, you need to find a new job. You don't need to wait. You can't just wait it out. You've got to go. You got to move on. You got to find something
Well, there's
else
only
because you've
there's
got
only
a family to
there's only
feed.
there's only so much the bank will front you too, right? Like,
Yeah,
so that's the
and
other thing. Like, especially community banks, because they do some stuff, but like, if it goes on long enough, right, those numbers just get bigger and bigger, right, and the eventual payout just gets bigger and bigger. So it just there's I feel like there's this like almost like a spring like coiling up, right, having to do with all this money that has to get spent but can't. But also with the government shutdown, something to think about with these airports is less about the air traffic controllers and more about the people who are actually doing the stuff around the planes, right? Filling them up with fuel, dragging them around and parking them, waving the little glowy wands around, that kind of stuff.
Just
Those
checking
people, the
them for
people who run
routine
TSA.
maintenance. I feel like every plane I've
inspectors.
gotten on
No,
this
not not
year.
not maintenance, but operations.
I Dude, I'll tell you, I feel like every single leg of travel that I've taken this year, something happened, right? And it's never the case that like every leg goes smoothly, right? I mean, it's commonly something gets delayed, something gets moved, something gets canceled, but it's like every leg now. It's like if nothing happens, I'm like shocked, and I feel like air travel is kind of collapsing, and I feel like nobody's really talking about it. But from a logistics standpoint, it's not doing great.
I mean, you fly more than I do, but most of my flights, admittedly, I haven't had to fly in since I want to say it was March or something like that. They've been largely uneventful, but I mean, I can't speak to more recently about the experience. I can only imagine what the security lines are like right now, and the delays and all of that. I mean, it's got to be just, in terms of trying to travel without like unless you plan super far ahead. And even so, I mean, It's just got to be a nightmare getting through all the gates and shit.
Yeah, I just don't really appreciate the perceived, slow collapse of, the infrastructure of a first world country. It doesn't sit right with me. But anyway,
Yeah.
okay. So things are moving in the wrong direction, but moving very slowly and could be reversed in a lot of different ways in the very
Yeah.
near term. So you kind of are just sitting in a situation where there's a lot of uncertainty on both directions. So you kind of climbing the wall of worry. Um, as we kind of pivot over from market overview into macro and earnings, are there any earnings that stuck out to either of you that you want to talk about?
Do options Greeks just sound like Greek to you? Check out our free learning materials at app.gammastrike.com/docs to get a better understanding of how to understand market maker behavior.
You're supposed to punish me with that if I don't do a transition in time. I was in the middle of a transition. You're punishing me for doing what you want. What do you want from me, Ron? Just tell me what you want from me.
I think he wants a bigger cage.
Okay.
Or maybe to turn the shock collar up a little bit.
All right. Whatever the fuck that was, let's just move past it.
Why is it so pleasant sounding?
The music almost sounds like a SSRI commercial or something.
It was a soothing tune. Okay, I'm coming down. I'm thinking. I'm internalizing the tune.
Might cause erectile dysfunction.
might. Okay. Any earnings that stuck out to you? There's a few that stuck out to me. I don't want to linger too long because I think everyone's got earnings fatigue, but.
A lot of earnings.
Do we really have earnings fatigue in the second week of earnings?
I mean, there's just been a bunch of big ones like tech, They
were so boring, though.
Yeah, so an interesting one to me was Palantir.
Oh, yeah, because he talked a bunch of shit in the stock tank.
Yeah, he kind of lost his shit.
Because he just went fucking ham on Cam.
Yeah. Well, we're going to talk about another CEO that lost his shit, too, later on, Sam Altman. He lost his shit.
Oh yeah, Sam Altman was.
I heard Sam Altman went with open arms to the federal government.
No, that's later. That's the CFO. That wasn't Sam Altman. But there was an interview. It was actually quite a friendly interview. The person interviewing him was an investor in OpenAI. And asked him the simple question of how are you going to actually pay for these $1 trillion of obligations that you're racking up, and Altman basically just like took his ball and huffed and puffed, and everybody watching was just like, yeah, that was as bad of a softball as you could get for a perfectly legitimate question from a
is Sam
friendly
Altman gonna be the person to tell himself no?
I don't know. I don't really know. But it was just so bizarre because you'd think that he would. I mean, he has had those moments where if he gets a question he doesn't like, he gets really pouty. It doesn't happen super often, but when it does, it's interesting. But this one I think is caught on because everybody wants to know the answer to that question. I mean, you're at $1 trillion now. Once you breach $1 trillion in obligations, it's like, what are we doing here? How is this? What's the path, right? And then, not to totally hamstring our discussion of earnings of public companies, but, then it comes out, was it earlier today, I think it was, if it wasn't yesterday, the CFO, one of the things that they highlighted was that they would like to see the federal government backstop loans for data centers to
$1 trillion worth of them.
Yeah, I guess $1 trillion. Just to kind of keep the money moving on that, keep that gravy train going, so that nobody happens to think about telling Sam no. So I think that Sam's at the point where he is getting nervous that someone might tell him no.
It's very possible. I mean, yeah, that interview was interesting. It wasn't just a softball question. The dude was probably like they probably have some sort of spin for this, and it's a question in everybody's mind, so he had to bring it up, and he's like, look, I gotta ask you, right?
Yeah.
And then
He
Sam Foley
owns shares in OpenAI too. The interview.
yeah, he literally was like, he was like telling like, well, I'll find someone to buy it. And he was like, that's me. I will buy it. Like he was just full
he's
on,
like, if you
just
want
on
to,
Sam's
it's like,
side.
how are you going to get all this money and spend it? He's like, well, if you want to sell your shares, I'll find a buyer for your shares. Ugh. Like,
yeah, he was like,
I'm so sick
was,
of
yeah, but it was like
these ridiculous questions of how does a company that makes, $12 billion a year and loses $12 billion a quarter, how are they gonna raise $1 trillion in the next 3 years? What a ridiculous question.
it reminds me of Elizabeth Holmes in a way, right? She had the same sort of thing going on behind the scenes where anybody who questioned her was like just absolutely like the devil. So it's a common thing for people who are trying to, have some sort of persona that they're trying to portray that in his case too is materially affecting this company, and he's the face of the value behind this company for God knows what reason. But now he's got the shtick and he's going to stick with it. And if anybody questions it, I mean, and he has no answer, aggression is one of the classic, human emotions,
Well, that takes us
to
back to
respond to that.
Palantir. Also was weirdly aggressive towards short sellers. He has a history of doing that. But I mean, this
Oh
latest
yeah,
one,
he hates shorts.
But
A
here's
lot
the
of
thing.
CEOs do.
Here's the thing for me is that, you've got kind of these, Mag 7 earning. Well, I don't want to lump like Tesla in with real companies, but like, the Mag 7, for the most part, had ho-hum, good earnings, right? They had good earnings, right? Do they justify their multiples? Probably not, but like, were there huge red flags other than just all the capex that they're spending on AI that is, starting to encroach on all of their, free cash flow? Sure, but like, it's still a bunch of going concerns that are doing fine, right? Um, Nevertheless, they got quite punished, right? I mean, Amazon went up. I think that is largely, I think there's a lot of options hedging that's going on around earnings just because the delta on the chains are so high for a lot of those, but like a lot of them got punished too, right? People are starting to get punished. Like Meta got punished. Dork, you made like $90. How much did you make?
I actually made like $180.
Nice.
Thank you very much.
Okay. Yeah, so Meta got punished. I mean, a couple folks were punished. Palantir, another one that had fine earnings for what they are, like good growth for a small company, but their multiples are so insane that it's kind of interesting that we're now at the point where people are like, yeah, well, okay, even if you have good earnings, your multiples are so high. We're going to turn it around. I'm kind of getting a sense, you talked about this a little earlier. I'm kind of getting a sense that the retail pump that started in April is kind of running out of room.
Or money.
I mean,
well, yeah, that's the same thing.
Well, they're all burning it on 0DTs these days, so they got to sell their stock at some point when the 0DTs stop printing.
But are they finally out of money? Is this it?
I don't know. Maybe they could take out a third mortgage. Or a fourth.
I don't know.
Or a fifth.
I
or
don't
mortgage
know.
on their car.
I don't want to be crucified for this, but I think we're finally at the point where narrative always follows price action, and what I'm seeing is price action that is not as overtly bullish as it was before, where outcomes from events don't quite play the way people expected them to based on what's happened since April. And I think that's just an indication that people are out of leverage. They're out of cash to throw into this. And we talk a lot on the show about, kind of the macro environment, how much money actually exists, and how, households are more levered into stocks than they've ever been, ever. And, just wondering where that naturally ends. I don't know. We're in uncharted territory, but, I think we might be getting to that point. And I think that's probably, okay.
Oh, sorry. I was going to say, I wanted to loop back to OpenAI's CFO, because
Please
of
do.
this just sounds so wild. So I'm gonna paraphrase, but we can throw up the Bloomberg article in the discussion for you guys to read. But the proposal, unusual for a Silicon Valley tech giant, would theoretically reduce OpenAI's borrowing costs, since the government would absorb losses if the company defaulted.
Can I just get this
Hold
on the
on,
record?
it gets better.
Hold on. I want to put this up here now, and I'll let you finish. Eat shit, Sam Altman. Keep your grubby fingers out of my tax dollars.
Yeah. Yeah, they already think they're too big to fail, because by some estimates, OpenAI is committed to approximately $1 trillion in infrastructure deals this year alone, including $300 billion partnership with Oracle, $500 billion of Stargate project with Oracle and SoftBank. And while the company expects revenues in the tens of billions this year, impressive for any startup, that figure falls far short of covering the computing costs required to power OpenAI's advanced chatbots.
Let me just
during
let me
the
stop
interview.
You there. When they say tens of billions, they mean single tens.
Yes, they do. This gets better. Hold on, I haven't gotten to the good part yet. During the interview, Fryer dismissed reports that OpenAI plans to go public soon. IPO is not in the cards right now, quote, she said, emphasizing that the company's current priority is growth. Now, correct me if I'm wrong, did they not say last week that they fully intended to go public at $1 trillion valuation?
So that they could grow, because they had to get the money from somewhere to do
but
it.
But now IPO is not on the cards right now. Actually, IPO is not on the cards right now, and the government needs to pay us and backstop our loans, because we want to lower interest rate in case we default.
You know why they're doing this is because Sam Altman is afraid that what's-his-face, Satya Nadella, is going to break into his house and choke him to death in his bed at 3 a.m. one night, because he is losing them so much money.
Yeah.
Like,
I wonder if OpenAI will take out Microsoft.
Satya, you could have saved hundreds of billions of dollars if you had just given me $1 billion to tell you not to do this shit, because I've been telling you it's been stupid since the day you got involved.
What percentage of the S&P 500 is the Mag 7 now?
A lot. I don't know.
It's like 40, almost 40%. And then how much, I wonder with that kind of weighting, how much exposure the average American has to this bubble.
I mean, it's massive.
That's fucking scary.
Well, because a lot of people are VU and chill types, right?
Yeah.
And so
everyone's VU and chill types.
Yeah.
Even the people that don't even know how to invest are VU and chill types.
Yeah. So like it's kind of mind-boggling when you think about it, how many people are like, and you're talking pensions too and that kind of shit. I mean, like it is not
pensions,
just
mutual funds, everything.
Yeah, it's not just it's not just fucking degens with brokerage accounts. This is literally everybody.
This is every 401. Yeah, this is
if you have any beta in your portfolio,
in the country, every business in the country, every fund.
Well, it's like that's one
and
way
they're
to think
already
about
telling us we need to fucking bail them out
at the market highs. Yeah, I will say, looking back, people who've been longtime listeners of us and our various forums know that I went pretty much, I would say I went all into cash. My wife is not. My wife is still, in a passive growth kind of long-term thing. So overall, if you combine us all, I'm still like 20 to 40% in equities, but like I took everything that I had direct control of and I went to cash. And I did that after Yellen juiced bonds, because I was in mostly bonds and I made a shitload then. And then I was just like, I'm just gonna sit and make 4%, and I've missed out on a lot of this. So I think if I went back and I was gonna change my strategy, I would not do an all or nothing. I would have just slowly trickled out, kind of like what Warren Buffett has been doing.
Yeah, just slowly pulling back cash reserves.
Yeah, but at the same time, I still don't feel like compelled to jump in, especially now, like just based on the way that people are talking about this bubble. I feel like the FOMO part of it is dying, and that's the scary part. Because, I've been resisting FOMO. I feel like I felt my maximum amount of FOMO as somebody who's been literally out of this run since, roughly the beginning of 2024. I've missed the entire thing. I feel like I felt my maximum amount of FOMO around like 6,300, 6,400. But now up here, I'm kind of like, no way.
Well, so something I want to touch on too with the top heaviness of this market, with the extremely heavy weighting of the Magnificent Seven in the S&P 500. Something that needs to be considered is that the S&P 500 is considered, oh my goodness, it's Labubu time. So one thing that should be considered is that the S&P 500 is sort of the, oh my God, there's just more Labubus.
JFresh is just a cat image when we record this, and no one will ever know how many Labubus he's holding right now.
Yeah, I'm holding like $500 in Labubus right now.
So one.
Oh my, that is
3, but they're very large.
Oh my God, there you go, JFresh. You can skin the Labubus for your fursuit.
Yeah, just rock a Labubu.
No, I have to knit clothing for each one of them.
Oh my goodness. Okay.
Well, at least you're learning to knit. That'll be useful in the depression.
So, as I was saying before the Labubu Fest, so the biggest issue with the S&P 500 is that it is the standard measure of beta, right?
This is not Labubu.
There's this whole idea that when you have a portfolio, you find out what its correlation is to the S&P 500, and then you use that to hedge your portfolio with the S&P 500, right?
No one will ever see
the issue
this.
with that.
Sorry, I have another Labubu.
Oh my
this
goodness.
one has a custom.
Why isn't Ron playing an ad now when JFresh is doing?
Because he only punishes me when I do what he wants. This one is a custom knitted. My wife knitted crochet. Crochet.
That's beautiful.
So maybe when they go and edit the video and edit me out, they can take a snapshot of the Labubu with the little flower, and it's cute.
It's very cute.
Okay. Oh, that's by the way, for people who don't know. Oh, this is a secret Labubu. It's secret because I don't know. It's brown.
No one told anyone. Well, that's not a secret anymore.
Yeah. My wife has some people have a problem with 0DTs. My wife has a problem with Labubus. I think everybody that listens here can relate.
I think her problem might be
Labubu over. Go get the Labubus out of here.
So all I was really saying is just that the S&P 500 is the penultimate beta, right? It's what you measure your shit against, and you may think that your correlations are one thing when they're another. And especially with this top heavy of a market, your correlations can change very quickly, and so it's really hard to hedge your portfolio properly if you don't know what's going to happen with the Magnificent Seven. That's all.
Just watching you try to stick that landing after being just slapped in the face with a bunch of Labubus was a lot of fun.
I had to give the cliff notes because I was very close to losing my entire train of thought, being lost in Labubus.
They do that to you. You just get lost in them. All right. The only other, I think, earnings of note related to AI, Supermicro ate shit.
Yeah,
which I thought was interesting.
That's okay. They only provide like all the infrastructure for data centers.
Yeah. So you know,
not a bad look that they're doing poorly.
Yeah, but I
think
Qualcomm. Oh, Qualcomm did fine. They had an issue that a lot of other companies, I've noticed this is showing up on their balance sheets with the, I guess it's like repatriation of offshore assets or something. They've all been citing the one big beautiful bill, the BBW, and saying that they have this like big tax liability for alternative tax, and so I think that's related to like offshore cash. But yeah, so they got hit with that. So they had a gap net earnings that was largely negative. But if you exclude that one-time cost, which, it's always a one-time cost until it happens, 8 times in a row.
So that worked for Qualcomm, but it didn't work for Meta?
Yeah, that's kind of
Meta's was
interesting. Meta
CapEx.
had the same thing, but Meta also has a lot of those off the books loan vehicles. I don't know what they're even called. Well, they're trying to keep as much of it off the books as they can, and people aren't that dumb. I mean, people are pretty dumb, but I think that was a CapEx story that doesn't necessarily quite exist to the same degree with Qualcomm.
Yeah, no, they were being asked some pretty hard questions in their earnings too. There were some question marks about well, you're saying AI a lot and, obviously algorithms, but
Yeah, but like Llama sucks.
what are you
so
going to
what's
do?
going on?
What do you see? Like they were asking questions, like they were literally asking questions like, what does this roadmap look like kind of shit? And it was like, and there was really not much in the way of an answer there besides, we're going to use these AI things internally and it's going to be awesome and advertising is going to get better. We're going to be streaming ads right into people's souls.
Yeah,
So-
Everyone's
I
gonna
give
buy trillions of dollars worth of the thing we have because why? AI.
yeah. Well, I give
our
Sam
ads-
Altman a bunch of shit because he's a sneaky snake. But at least he is making like a good version of this thing that people are pursuing in this field, right? I don't think anyone's going to deny that. Is it the best? I don't know. Like people oscillate between Gemini and Anthropic and OpenAI. But you know who they never oscillate to? Meta. Nobody's using the llama models for fucking anything. Like they're literally not even in the running. They're not even a distant like placeholder, right? They're just nothing. And he's thrown so much money at trying to be cool and trying to get people to be interested in what he's doing, and just nobody cares. And I think that's a big part of it. It's just like nobody sees him as a competitive entrant in whatever this race is, right? We could all argue about the merits of this race. I think it's all bullshit. But, even if you didn't think it was bullshit, I think most people agree that Meta's in dead last.
Yeah, I can agree with that.
So
Yeah,
I think that
no one's excited about Meta's AI. I mean, honestly, if we had to parse it, I would say that the only models that people are actually interested in are probably OpenAI, Anthropic, and Gemini.
Yep. Yeah. And they kind of jump between them,
with
right?
Microsoft running fourth with Copilot.
Well, yeah, Microsoft.
Which is basically
that's just OpenAI.
GPT.
Yeah. That's just OpenAI. Yeah.
Okay, so Qualcomm then in that case, they don't have to deal with any of this shit. They just like whatever.
Yeah, Qualcomm's more of a they're kind of in that weird like picks and shovels area.
Yeah,
right?
yeah,
They
yeah,
provide specialized chips and things, kind of like Nvidia. It's nowhere near like the slam dunk, right? But they are a player in that space, kind of like how like Micron, their stock price has been just ballooning because they provide the RAM that goes into all these things. So yeah, but I do find it interesting that we have reached a point, as they always say, narrative follows price action. But we are kind of reaching a point where people are trying to justify and understand why things aren't going up as much as they used to, or why things are going down, even when things seem to look okay, right? I mean, that's kind of been the story of like, like AMD, their price didn't do great, but their earnings were fine. So it's a question of like, why are fine earnings now that would have justified a 3 to 20% bump 3 months ago? Why are they resulting in the opposite now? Right. And I think, it largely has nothing to do with the actual veracity of the earnings. I think it just has to do with how tapped out people with leverage are. Right. Anyway, do you guys have anything else you want to add to earnings before we move on? I know I'm about to transition for Ron, and then Ron's going to play this.
Fall Stars is a GammaStrike podcast. At GammaStrike, we work to present options data and market maker positioning in easy to understand and actionable formats to inform your trading decisions. Learn more at GammaStrike.com.
I literally asked him for that one.
Oh my goodness.
Okay, we're just going to pivot then. We're going to move to data. What's going on? I haven't even been looking. I assume none of the data's coming through. I saw there was some jobs came in at like 40,000 when they expected 20, and that was somehow good.
Yeah, ISM was pretty positive today, except prices were way up. But jobs and growth in services looked solid. Remember that ISM prices are kind of a corollary for headline CPI, so that'll be interesting. But I think a lot of the data we're just not getting, right? Like, we didn't get a JOLTS report, I don't think, at all. We're not going to get, non-farm productivity. We're not going to get labor costs. We're not gonna.
It's probably quicker to just say the things we are going to get than
Yeah,
the
we're gonna
things
get.
we're not going to
We're
get.
gonna get. Yeah, you're right. We're gonna get University of Michigan, and some Fed speakers, and I think that's it. Consumer credit on Friday, and then next week, I think we get some data out of the Fed, and we got some bond auctions, but not much next week either. So the data glut is just gonna continue.
Well, we'll all be waiting with bated breath for the 300 Michiganders to weigh in on, because we all
I'm
know
pretty
that
sure
that's
you
how
know what
that
came out
survey
actually?
works.
Something that came out recently that I haven't had a chance to look at, but Sluice came out in October.
Oh,
It did, yeah.
So
All data from the Fed continues to be released, and that
because
is
they're an independent
that's
body
correct.
that cannot be
They're
coerced
self-funded.
by. Yeah.
I mean, it's all flat. So, I just looked at the charts and just really quickly, and everything's flat. So, but I'll look into this and see if there's any interesting stuff in here.
Yeah. Well, we can keep going. Audience questions this week were a little light. You guys. Oh wait, before we get into questions, you have to play the commercial for real, I guess, Ron. No, he's not going to play it.
Well, no, wasn't that?
We're
well,
going
hold
to take a
on.
break.
Do
Ron?
options Greeks just sound like Greek to you?
No, that was his
Check out our free learning materials at app.gammastrike.com/docs to get a better understanding of how to understand market maker behavior.
I'm just imagining him saying that with a big smile on his face because he knows he's just like interrupting us to play that. Anyway, okay. Please go to the docs. I wrote most of the docs. I'm very proud of them. They need to be updated soon, but they're in pretty good shape. All right. So do we have anything else we want to say about OpenAI? They're on again, off again IPO. I mean, are they canning it for good? Are they so desperate that they're just like, we're fucked if the government doesn't bail us out? This is where I'm at, because I feel like I'm already short the market. I guess I should probably put that out there. I'm very mildly short the market. I think like less than 1%. but I want to be much more, and I feel like this might be it.
Well, like, so
what am I
okay,
missing?
this
Why
actually,
is this still going higher into year end?
what, the market, or
Yeah,
like, so
even
wait,
though OpenAI is starting, looks like they're starting to implode. The sentiment and the narrative online has definitely shifted. Everybody's talking about a bubble. People are starting to heckle Sam Altman about, the ridiculousness of the situation he's put him in. This is
I mean,
kind
it
of
sounds to me
across
like,
even the most bullish people. I mean, I'm kind of seeing everybody kind of talk this way. What am I missing? Why are we still going higher?
well, where's the, because there's nothing, like, there's no material reason to reprice, right? Like, sure, you can have all this bubbling, brewing cauldron of bearishness sitting here, but that's not going to do anything. Like, what it really takes is something material. So if OpenAI loses enough money for long enough and never actually really turns a big enough profit, then Microsoft is going to take a huge hit, right? The longer and longer that drags out, there's still that little bit of hope. But if, say, something even worse happens, right? Like OpenAI perhaps has to declare bankruptcy or something of the sort, that will immediately reprice the market. But you don't just pan.
Let me try to fight for my position. Isn't Palantir getting crushed on decent earnings?
Well, didn't Meta get crushed on a decent earnings?
Right.
Like, in terms of their
That's kind of
numbers,
where
they
I'm
were
at,
doing
right?
okay.
Because, people are starting to reprice that, right? I think people are starting to say, hey, these valuations probably aren't going to play out. They're already starting to not play out from what we initially were hoping when we started this bubble back in 2022-ish, time frame.
But you're thinking of now we have to differentiate, though, I think, between a bubble collapsing and a pullback in expectations.
Are they different?
So if you're talking about the collapse of the bubble, that's not going to happen until something serious happens, right? Like, there's like a big scandal or a bank or an AI company such as OpenAI, something like that, where these losses. So, like, when you think about, like, the reason why OpenAI partnered with Microsoft, when you think about it, is that Microsoft has a shit ton of money, right? So they can fund a money losing venture for a long time, right? For longer than they could without them.
But none of them can fund a $1
So
trillion loser.
no, so that's what all that shows you, though, is that I think, to me, it suggests that they are just doing the equivalent, the Wall Street equivalent of sitting in a box on the sidewalk with the old coffee can, you know? Like, I think that's what's going on. He's trying to get money from everywhere he possibly can because, one, he is trying to grow, but two, he's also losing money.
Yeah,
Like, the only way you can
you
keep
have
that.
the CFO, today saying, basically Donald Trump, come and save us. And I have to imagine that the people who are already in on the Donald Trump trade, who are currently getting kind of burned a little bit on the Bitcoin side of it, thinking that, is he really going to be able to prop up this side of it if even like the little Bitcoin one is starting to deflate?
Well, that would probably be that's the whole trade, is that he will. But ultimately, right, in order for the AI bubble to pop, you got to see something serious happen. If that money gets appropriated to specifically just open AI, right, that's going to be so unbelievably bullish because now they can keep going for a long time, right? If they pay them something like, even if it's at a rate of, like, let's say, 10, 15 billion a month, right? And they say, we'll do this for you for 20 years, right? Even at that rate, that alone gives them just an insane amount of runway to just do the dumbest shit you can
But I
imagine.
feel like that statement, like trying to normalize a statement like that, like,
I'm not saying I think the odds are good. I'm just thinking I'm gaming that out
yeah,
because that if that happens, right, then that would be crazy bullish. But if that doesn't happen, okay, let's just say it doesn't happen. All right, where's their money coming from?
Let me ask you the flip question. Where's the money coming from to rocket the market to 7,000 by year end?
That money goes in a circle. It's the saddle. It's literally just the short vol trade and dispersion.
Which has really been struggling up here, huh?
It has.
You think it'll regain? I mean, it regained some control today. Do you think it's going to be able to hold on? You're the trader. I know you're not feeling well today, but come on, man.
Well, I just want to say, looking at GammaStrike, right, at the neutrals for SPXW.
Oh, you're just like trading between shilling our.
Well, but it's important. We're trading between delta neutral and gamma neutral on SPXW, right? Which is kind of that sort of,
yeah,
could be a bounce.
I mean,
right?
No, you're right. We're right positionally. We're in an area of high uncertainty.
Yeah.
I think that's where we are overall. I think a lot of the sentiment about the bubble being too inflated and some risk off being needed is being compounded by these statements coming out of OpenAI and by these kind of lackluster earnings, right? And if you really think about the AI cycle, we know tech's doing well. We know they're spending a lot of money, but why aren't we seeing the improvement in down the chain, right? In these companies like SMCI, who should be direct beneficiaries of all this money.
You can say Benny's here.
Yeah. I mean, they should be, and we're not seeing that big uptick in revenues. We're not seeing the big uptick in EPS, which kind of begs the question: where's the money going?
That's another side of it.
And if your company's going to be worth, $20 trillion in potential revenues over the next 30 years, why are you selling your stock? And these are questions I think everyone's starting to ponder, and I think a lot of people pondering them might own a bunch of AI stocks, and that's a tricky situation to be in, whether you're an individual investor or a fund manager. You're thinking about protecting your money or your clients, because when the FOMO ends and the adrenaline fades and you have to take a step back, it's a distinct possibility that everybody might turn a little bit more cynical, and cynicism turns to fear in the market really fast. And I think it's not long before we're all vindicated for hating AI for the last 3 years, despite its momentous rally. And I also haven't been exposed to AI. And Yellen started issuing on the front end, and I just bought gold, which turns out outperformed AI. But who would have seen that coming?
Yeah, I wouldn't have believed it if you pitched it to me then.
Yeah. I mean, remember everybody laughing at Peter Schiff?
Yeah, and now you know what the let's see, 1, 2, 3, 4. Again, I'm also on GammaStrike on the macro page. What's the 6th largest chain by delta right now?
You tell me. GLD?
Yeah.
Yeah, that sounds about right.
Right behind IWM, which also has just been a ridiculous mover. And then Tesla, Nvidia, QQQ, SPY. Number 6 is GLD. Kind of crazy.
Yeah.
Anyway,
that is crazy.
Beating out Meta, Apple, Microsoft, Amazon, Google, AMD, Avgo, Palantir, Netflix, Google, MicroStrategy, TSM, UNH, and Mu, which is Micron. Yeah,
it's crazy.
Fucking wild.
It's crazy shit. Just single companies with that much delta on them. Ugh. Kind of sickening.
Yeah, what's not on that list what has been on that list for quite a long time, IBIT.
Yeah, that's true.
Also Palantir, right?
Well, Palantir's, they're still there. They're number like 15th or 14th.
Oh, okay.
Well, so what's interesting is the Bitcoin sad faces, there was a ton of volume on IBIT
Yep.
Just
A
done
lot
the
of
stonky stonk.
options. Yeah.
Yeah. So it just deleveraged like crazy.
Yeah, there has
well,
been a
I
lot of
mean,
Delta fall off on it, and I think that's a
that
lot
falls
of it.
back to the SOFR IORB thing, right? Their banks own the majority of the Bitcoin that's out there. And when they need cash, they need it right now.
It's true.
Call J.G. Wentworth.
Yeah, you'll hear a million conspiracy theories about why Bitcoin sold off $30,000 in a couple days, and it's just because banks needed cash. And if banks continue to need cash, which it looks like they do tonight, because yields are up again on the front end of the curve, they're going to keep
Stars
selling
is a
that
GammaStrike
Bitcoin.
podcast. At GammaStrike, we work to present options.
God fucking Ron, I'm trying to tell people about their bad investment into fake money.
I will say a big part of the Bitcoin one is I track the ETFs, and I've been tracking them since the day they opened on like Jan 2024. And the holdings have been, the outflows have been slightly negative lately, which doesn't help, but largely flat. I mean, like total assets under management kind of largely flat since, we peaked at like 120, whatever it was. 125 or something. Like there hasn't been a ton of outflows since then, which is kind of scary. So you think about like who's selling. You've got, all of the you've got all the miners. They have to sell to, manage their business. There's only so much they can hold, right? They have to start selling at some point. And they've mined, about 40% of all the money that's been put into these ETFs have already been mined away by the miners. But they've started their own like, strategic funds or whatever the fuck that shit is. But they have to sell some of it, whether they like it or not. And but none of the people who've invested in these ETFs have really sold in any meaningful size. They're all currently holding a bag. And so yeah, you kind of have to ask who's selling, and none of the answers are very positive.
I have an interesting chart. Have you looked at IBIT's volatility?
Not lately, but I have been checking it out. What do you got?
I mean, we'll just I'll post this in our little Volstars porn channel. But something that's just interesting is that implied volatility moved up a lot faster than historic volatility through like October, and like through late
I see
September, early
that. The
October.
30.
Yeah, yeah, and then volatility on the actual ETF itself picked up, like the historic volatility picked up afterwards, right? So I'm thinking that maybe, especially now with the inclusion of Bitcoin ETFs, I'm thinking that maybe there's some sort of a dispersion trade happening there as well.
That would make sense.
So there could have been deleveraging in the Bitcoin ETF options market or something like that. And that could trigger a big sell-off in Bitcoin if these ETFs get enough exposure, right? Then they're definitely correlated.
Well, yeah, if you look at like the tippy top of the peak, which happened around the beginning of October, you had delta on the chain for IBIT of something. It went from like 12 billion to almost to around 20 billion over the course of like a week.
Damn.
Yeah, talk about a whale.
So just to put that in perspective, like the total assets under management of all of the Bitcoin ETFs is something like $55 billion. So you're talking about
That's
like
wild.
20% of the assets under management of all of the Bitcoin ETFs was in just the gain in
40%.
Yeah, I can't do math, whatever. No, it went from like 10 to 20. So 10
Oh, you're right.
yeah,
You're right. You're right. Sorry, I didn't do the difference.
Yeah, so 20%. rise, right? $10 billion
Crazy.
basically in 2 weeks. Just on the options chain, and then that unwound, right? So like basically going from I don't know what the conversion is, but going from like $62 on IBIT up to $72 was all options, and then that unwound back to $62, right? And then now we've got a little dipperino here at the end here. I don't know what that's about. Probably a little bit of selling by everybody, but most of that pump and dump was just on the options of IBIT.
Yeah, here don't worry, Ron, I got a graphic for the old viewers here as well for that to show what JFresh is talking about. Yeah, no, it's that's going to be interesting going forward too with this whole crypto thing, right? I think that's something that probably isn't looked at a ton right now. But it probably will receive close attention the more impact that these ETF options markets have on the actual currency itself. Currency, I'm using air quotes right now, currency.
Yeah. I mean, I'll be honest, I'm a cynic, but I think almost 100% of the price action has been from the ETFs.
Yeah, you think so? You don't think it's Michael Saylor buying?
What's really interesting is that Michael Saylor has bought a significant amount relative to the ETFs since 2024. But the metric that I've found that matches the price action that I've seen the best is just how much money goes into the ETFs minus how much was mined. That tracks with price better than anything. And Sailor's buys don't impact it at all. So I don't know who he's buying it from, but he's not doing it on the market. He's not creating
Buying it from
market pressure.
Satoshi.
So either he is the one who's buying the ETFs, or he's found somebody who's willing to give him a shitload of this stuff, probably the miners. I don't know. I do think it's kind of interesting that he's unwilling to share his wallet addresses, and he's unwilling to share, where he's storing it and where it came from. I don't know. A part of me says that he's just buying the ETFs. He is the buyer.
And the seller. It's just, yeah, that would be, I'm pretty sure that would be fraud.
But I can't find a way to make his buying pressure affect price at all. It's all just what flows into the ETFs minus what's mined. That's what determines the price.
Yeah.
Anyway, we could probably wax poetic about this. We've already, I'm sure like half of our potential future audience loves Bitcoin, so we've just tanked ourselves.
Completely ruined it.
But you know what? It was worth it.
Yeah. I
Because
mean,
even if we just have an audience of one and that one person is fucking Ron, I'm still doing this. Okay.
Well, speaking of stupid bets, stupid bets. Who's going to win? Who's going to lose?
I would just like to claim victory from last time that I got them. I assumed 3 of the 4 would beat. So the bet was Apple, Amazon, Lily, Coin. Beat or miss. And I bet Apple, Amazon, Lily would beat and Coin would miss. They all beat.
Yeah, they all beat. So JFresh wins. He wins with a 75% correct score.
Yeah, and Ron loses because fuck Ron.
Yeah, his bet didn't even matter.
So what's our stupid bet this week? Okay, should we pivot back to, I'm just going to throw this out there. Should we pivot back to the shutdown now that we're in officially the longest shutdown of all time?
What's the bet then?
I don't know. What day?
It'll be the even longerest shutdown of all time?
The longeriest.
This will be the longest shutdown ever.
Can we put that on
in
Trump's
the future?
Wikipedia page? He was the commander-in-chief presiding over the longeriest shutdown of all time.
Let it be known.
Hear ye, hear ye. I don't know.
Oh, so I guess the bet would be, does the shutdown last another week?
Yeah. I mean,
I might be willing to take that bet.
Which side?
That it won't.
Oh, that it won't. Okay. Yeah. So this is a much more interesting bet than it was in like the first week when you were like, yeah, it's not going to make it 8 days. Yeah. See,
I was just playing the statistics. I was like, I literally was just pointing out. And then I was like, you know what? I'll take the statistical side because why not?
As all of the seasonality people are finding out this year.
Yes.
The variance is larger than the mean.
That was. I'm okay with being wrong.
Which
on
was
those
also
parts,
true
I know what I'm
in
doing.
September and October when everyone is like, oh, it's got to go down because it's September and October.
Yeah. It's almost like
seasonality is bullshit.
And it's almost like I'm telling you exactly why it's bullshit succinctly and perfectly in one sentence, because the variance is larger than the mean. And if you don't understand what that means,
analysis tells the future.
Yeah, if you don't understand what that sentence means, then you shouldn't be playing odds in the market.
You're probably not qualified to assess the validity of anything.
Yeah.
In the market.
Because what seasonality tells you is over 100 years, if you bet up or down in this month, over 100 years, this is your expected return. But in any given year, you might as well stick your thumb up your ass and pray to Mama
You know what,
Yellen,
though? This is
saint. She's been sainted this year, right now, on this show. This is our scoop.
So this is better though than the people who like to reference that the cycles from that one book. What is that? Was that some
Elliott
fucking
Waves?
farmer or something? Well, yeah,
Farmer's
like
Almanac?
The dude who was like,
no, Farmer's Almanac is actually just like an alien artifact.
Market cycles.
That is correct. Farmer's
Almanac.
No,
this dude who's talking about cycles, like starting back in like the 20s, and like he was predicting forward, and he was kind of close to right sometimes, and so people like to refer to it and be like, "Oh, look, we're headed to the good times."
Nostradamus? I don't know who you're talking about.
Pretty much, it's pretty much what it is. Just some fucking dude who did it's like in an old ass book. Anyways,
fucking
so we're gonna
bet
how much longer the government stays shut down.
I mean, I think
that's not fair. So we're like a few weeks ago, I said forever.
Yeah. Okay. So we're already out of distribution, right? We're in uncharted territory. So statistics,
which is where I said we
can finally free ourselves of the statistics that never mattered.
Yeah. Because, the sample size was like 8.
Yeah. The variance is larger than, I keep saying it over and over again. People keep not knowing.
Thank you. The Benner cycle. Fucking Ron went ahead and reminded me about the fucking Benner cycle.
God. I'm actually going to try not to read about what that is. Because
you will be dumber for having read it. Okay. Do not do it.
Some people think it's like the Bible of stock investing.
No, the Bible is the Farmer's Almanac.
It's literally Nostradamus for the market.
I will stake my tenure on the Farmer's Almanac being an alien artifact.
Oh, shit.
Good thing you're anonymous.
They're so nice. They're such high quality.
This is why I'm anonymous. If people are wondering, like, why is this weirdo? Why does he have like a cat picture? Why doesn't he show his face? It's because I say ridiculous things like that. All right. Do we want to make a bet on this, or do we want to pivot to something else?
We could bet on it. I mean, my prediction is that the government doesn't reopen until the SNAP benefits case gets to the Supreme Court. I don't know how quickly they'd be willing to hear it. Probably quickly, given the urgency.
In the next week, quickly? Because wait.
They're doing the tariff one right now. So it's probably next I'm not even sure it ends. Right? It only ends if they force Trump to fund SNAP during the shutdown. Otherwise, the healthcare. Has everybody seen their fucking premiums yet? Have you guys seen your premiums for your
I'm hoping
health
my
insurance?
Business doesn't change that much. I'm not on.
It's going to go up. They're up for a lot of people receive discounts because of the ACA.
Yeah,
and they're no longer receiving those discounts.
Yeah, they're getting like 400% increases, which is insane.
400 or 500%.
Which is why the government shut down, right?
Like if you go on our health insurance on Reddit, which is, one of many bullshit subreddits about health insurance. Everyone's just posting their premiums for the new year, and they're like, guess I'll fucking cancel. Like, I mean, they don't have an option. And we're kind of back to the pre-Obama days where you just couldn't get health insurance because it was so much fucking money. If you were an independent contractor, you owned your own business, or, I mean, this is anecdotal, but I think my premiums went up like 15%, and I don't even get any ACA credits.
Well, that's when I was saying a couple weeks ago.
You are lying, Greg. This subreddit is very sad.
Yeah, it's so sad.
When I was saying a couple weeks ago with the UNH earnings, right, their costs were up like 19% or something like that, year over year. Like, and what do you think's going to happen?
I honestly wonder, because we have this closed window within which people can register for their health insurance. If the effect of the ACA benefits wasn't priced in correctly by the market into like UNH and Aetna, and Cigna, and all of these corporations, because how many people are going to cancel? Right? They were like, oh, we're going to have to, these stocks are all going to drop because the ACA benefits are gone. Now, what if like 35% of their subscribers are gone?
Okay, we're getting a little off the topic of this. What's the bet?
Well, no, I'm saying that like.
So the bet is that the people who are losing their ACA credits are going to drop their insurance carrier plans.
No.
We're not going to get that.
Government shutdown.
It's got to be
that's an entire
week.
quarter.
We got to have we got to have resolution in a week.
So it's got to be greater
shutdown
than 20
continues?
days, because it's got to be after the deadline for open enrollment closes.
You're long shutdown.
Yeah, very.
So by this time next week, shutdown's still on.
Okay, I'm going to go on the other side just because we got to make this a real game here. I'm taking the other side because it's gone on for too long, and the Democrat frickin' whatever happened, and I think that's going to make Congress nervous about their own districts. And so they're going to cave to the Democrats' demands, reopen the government, and everyone's going to be angry about it.
Do you think we're getting the ACA credits back?
Yeah.
Ooh,
probably. Yeah,
I kind of think that.
So the Dems are going to win again?
No, in some capacity, there's going to be a compromise.
Subsidies.
Oh, yeah. For voters, yeah.
Once you give them, you can't take them away. I mean, just look at the tax credits. They're permanent now. This is just other side of the same coin.
Yeah.
So I'm going to go with Dork on this one, but I'm going to add a wrinkle to it. I'm going to add like I don't know what they call it, but I'm going to add like
a side bet.
A side bet. Government open, funding, money printer print, stonks down.
Ooh.
Very intriguing.
I'm saying stonks up.
I thought you might.
Yeah, so that's our side bet.
So yeah, I'll have a little side bet with Dork.
All right.
Yeah, that way we still have a winner in the end, right?
Yeah.
If we're correct. Yeah. And then Girk, in your situation, if the shutdown persists, I mean, the market's just going to be volatile. So
yeah.
But it'll probably pick a direction if we open.
More down.
Yeah, it does.
You know what? This shit's gone on too long, so I'm just going to cut it off right here.
Shit,
Ron, play us out.
Thank you for listening to Vol Stars, a GammaStrike production. Please be sure to subscribe and check out our website at app.gammastrike.com.